Morning everybody, it's Chris here from Serene Education with the 4 major analysis update for the Friday, the 10th of June 2011. It's going to be starting with our Euro against US dollar. Let's have a look at the CTC strategy and see what's happening. Okay, so we had a ceiling level. Price fell to rally above 14,700 for a number of hours, and a full day we saw a heads up. Price fell to break higher than that, and what we've seen is price falling quite dramatically in the last couple of days. After breaking through the price support, we were hoping the price was going to nail it, but failed to do so, and price is now on its way back down again, and the next target is roughly the previous swing up here, just around the 14,400 mark. Or we could see a bounce in the 50 thereabouts, roughly around the 1442, 4300 mark. But that's probably where prices are heading for as we speak. And remember, the long-term outlook for this pair is still bullish, bar a couple of pullbacks, etc. That was the initial major trend. We've had a bounce now, so that's the next one. But you can see the price is pretty much still on the upside. And then we've had a number of bounces. So if you took the projection from the initial start of this trend, the major trend up, we are now seeing a pullback just below the 38.2% mark, almost hitting the 50, and we've seen a bounce back up to the upside. Now what we've done is we've seen the totally opposite now in this trend to the downward. This pause, if you took the high of this candle and you projected you want to see how far the fib projection had got, it had actually gone right past the 61.8%. So almost an indication that this actual pullback that we saw here of this was initially far extended, and we were going to see further extensions higher. But ultimately what happened was there was a correction in the market, and since then we've obviously seen price pulling back, and it looks like we're heading towards possibly the 50% mark to start with, roughly around the 14,450 mark, but ultimately back down to a possible swing at 14,400 would also be on the cards for this pair. So intraday, let's have a look. You can see on the 4-hour time frame, notice the higher swings in this pair. It all becomes a lot more apparent, especially if you're looking at the higher time frames, the swings. Beautiful swing highs on this, depicting beautiful price movement to the upside. However, we had the highs getting slower, and then we had a breakout. This breakout, yesterday's drive, or the past couple of days' drive, is now broken below a previous support area. And what we've seen now, price is breaking below it, pulling back, failing to break higher than that previous support area, and continuing to the downside. It is now testing a prior resistance level. That is the 14,500 mark, I apologize, and which happened to be prior support and resistance in the past. And as I mentioned, 400 could be a likely target again, because we've seen a major support and resistance level in that area, and our 200 period moving average is not too far off from that. But the swings, you can see the major swing up to this side. However, you can see the intermediate swing down, lower swing here, even more dramatic. And if you do a fib projection from where we started the trend to the downside, we see a pullback here. 100% is met. We're trading at 100% of the initial breakout or breakdown of this move. 161, 261, and 423 well extended. 423 would take us pretty much back down to the start of this uptrend that we saw on the 23rd of May. So be aware of that, guys. It's important that you understand these breakout and pullbacks and continuation patterns. You could do the same on this extension too if you wanted to. This is the breakout that we saw. We've seen a slight pullback, and now we're seeing another continuation to the downside. 100% would roughly take us around the 14,3,800 mark. 161 would be well advanced to a prior support and resistance level, just below the 14,300 mark. 261 will take us down to the bottom end where we saw the price pull up sharply. So it's all there. Hourly, you can see the breaks, swing lows, dictating price movement. A lot more bearish on the hourly chart, trading below the 200 period moving average as we speak. Very bearish indeed. Indication, support, breakout, pullback, resistance at 450, 14,500 or 450, apologies. And then we're seeing another possible move lower taking place. So extension, this is where price started the move down, and we're looking for further downside movement this Friday morning. Okay, so look for shorting opportunities, look for clear breaks below price support and resistance. Make sure your CTC is in your favor before taking the trade. Very important. Next up is sterling against US dollar. Let's have a look at the daily. Here again you can see the price is now seeing on a minor trend. You can see the price is pulling back significantly, but the major trend is still up. That's the major. Let's put this in green. So the major trend is still up. The minor trend, however, minor trend is down. Come from a high, swing lows. Yesterday's, we've had almost 4 or 5 days of consolidation, and then we've had a break to the downside. Yesterday's candle showing the downside movement, trading below the 50, which was acting as a support level for a number of days, or almost a full week. Support, breakout during the Asian session last night. Going into the European session this morning, we've seen the Asian sterling trading lower, and now trading at a previous low on this candle here. There we go. Testing that, which happens to be some pause and resistance in the past. Oops, if I can draw a line, it'd be great. I'm not playing ball today. So where could we likely go to? Well, there's a major support and resistance line here at 16,2500. So ideally that would be the next target. CTC on the daily is still blue. However, we have a red arrow confirming heads up. If you look at your smaller time frames, just do that. 16,2500 is a possible support area. Let's look at our 16,2500. Can't even get it on this chart. Let's move to, there we go. That's where our possible first target is likely to be. Just remember, price is testing a price supporting area on the time frame right now, but you can see that price was in a consolidation. Notice the swing lows bouncing between the range and then the breakout. And notice the CTC at the top here, very erratic as we've been moving in this channel. And then the one thing you notice is price not moving higher than the previous one as it's done in the past. So this one's trading between 2 points really nicely. Upside, pullback, upside, pullback, upside, failure. Then an attempt, a failed attempt, this high, lower than this high, showing that the momentum was now changing. And because of that, we should have been looking for a break and a CTC change. We had the bearish candle that definitely confirmed the bearishness. We needed to see a breakout. That candle there broke out. We had a consolidation under that bar, and we're now moving south. So CTC is playing very well on the 4-hour time frame. Let's have a look at our hourly. There again, flat during the latter part of the US session trade last night, GMT, and then Asian market. Because we're coming from negative and have had a lot of bearish news yesterday out in the markets, we saw the Asian session taking that into their session last night and falling almost, if I wouldn't be surprised, 100% of this initial move here. So this breakdown that we saw during the part of the European and US session, we saw a slight pullback And 100% is not too far off of that initial move, and that's what you want to see. 100% of breakout would take you to 100% of that. So 2750 would be our ultimate target for this breakout that we saw here. So an hourly chart, you have a potential target 162750 for this pair if it continues to fall to the downside. There you have 162750. We put that in. That's our goal. That's our target. If you look at it, that's where the movement started. That's where we had the consolidation, and that's where price bounded to its highest point. And we drop it. It's just traded below the 61.8, but 100% at 1627.50 would be our ultimate target for this pair for today. Moving on to the US dollar Swiss franc. I've just got the daily up here. You'll notice that the US dollar has found support at the bottom end of this candle here, the low of 83.35, and since then we've seen price push back, and now it's testing the previous swing or support area at the close of this candle here at 84.1900. So if you look at our intraday charts, let's have a look at the 84. Let's make it 20. You can see that's now testing a prior resistance support level on this time frame. Let's have a look and see. Here we go. Notice where price is trading now in conjunction of where it was before. So notice the extension down. The major trend on the 4 hour was that swing lows. More touches, the stronger the trend. And what we've seen just recently is a breakout of that major trend, but at the same time finding support, failing to break lower. See here? Break low. Trade. Instead of breaking lower than the previous one, finding support and breaking higher than the previous swing low, which now has cancelled the trade. We went sideways for a while. Upside movement, retested a previous resistance level or support area before we saw the breakdown, and now trading slightly higher. It needs to trade higher than 84.50 to definitely be confirming further upside movement on this pair, because you can see now this little swing over here has been formed, and the blue, we have blue candles now after the arrow. CTC, however, is not going to give us that blue indication until we're actually trading well above this range over here. So this is going to be very, very important. The good thing at the moment now is it's actually using the 50 period moving average on the 4 hour as a support area. And if we can see a bounce higher, you can see this nice bullish engulfing pattern now off that, bouncing higher. If that remains the same, we need to see it close higher than the 4 hour close at 84.2800 to confirm there's still more upside movement for this pair. And if we can see that, then we'll see the CTC on either side going blue in the next couple of days. And then what we could do is see the US dollar rally against the Swiss franc, and we could possibly see targets roughly around the 84.750 mark to start with. There's another one here at 84.55, and then way up here at the 87.70 mark. So there's scope here, but first things first, don't get carried away. It's got to give us another indication of, otherwise we're just going to get caught in this consolidation band here on the 4 hour. You can see it, it's very close. So ideally you want to be trading above 84.50 in order to be looking for further upside movement. You don't want to be caught in this, because put all these together, it's just one big down candle. We don't want to be caught. See, I notice here, for example, these is going to be wicks, but this is a good sign. As long as it's trading above 50, it's a good indication that price is still wanting to trade higher. As long as it stays above the 50, as long as it can find this previous support area here. Oops, if I can draw a marginal straight line, it'd be great. There we go. If you can still find support above the 50 and that little swing that it formed here at 84.05, then we should be still looking for possibly further extensions higher on this pair. So make a note of that. 84 on the small time frames. Oops, got the wrong one here. let's go back here. This is 84.05. Okay, there we go. So if you can remain above that area, then it bodes well for the upside. Notice the swing high posted recently, 50 period moving average acting as a nice support area on this 30-minute time frame, pushing higher. CTC is blue. We'd like to be trading above the 84.35, 84.40. We don't want to be faked in, but if we get another bounce and it's still trading above the trend line and above that support area that I mentioned earlier, then we should be looking for further upside movement. Failure to see that would obviously just confirm this is just a consolidation, and we're stuck in that consolidation range that I mentioned that we're seeing here on a 4-hour time frame. All this on an hourly, if you want to really break it down, it's just noise, and it'd be far better to be trading above the noise than to be stuck trading in it. So we're above it. Got to get through this. If you want to take a cheeky trade to the upside, you're more than welcome to. It's entirely your choice. We are swing high, and the CTC is blue on an hourly chart. We have a blue, and the 200 period moving is trading below it. So it's trading above all the moving averages on an hourly chart, which bodes well for it, which means good. Market sentiment is changing. It's great. As long as it can stay above that level here at 84.050, we should be hopefully looking for further extensions higher going into the new week, into next week. The last pair of the day is US dollar against Japanese yen. Let's have a look at the daily time frame. Okay, we're all talking that 80 was a potential support and resistance level long term, and sure enough, what we did, we had a cheeky breakdown 2 days prior on a Wednesday. Thursday's candles just cancelled it all out because of all the market news that came out. We saw the US dollar rally on a lot of the European cross pairs, and now what we're seeing is price pulling back now in the Asian market going to European session open. Back down again. So it's pretty much toying with the 80 mark at the moment, which happens to be a long-term support and resistance level. If it could stay above the 80, then what we could do, we could be seeing the start of a potential pullback, and then we could see possibly the 8200 being retested because we've been there in the past. Okay. Notice, however, that we are still in a negative downtrend, and the first thing probably is swing low, and because we're from a high, you can draw a major trend on this time frame to the downside. And our first port of call before we can get to 8200, if this is going to continue moving to the upside, is the previous swing to the downside, which happened to be this little bad boy over here. So if I can draw another straight line, that'll be great. Doesn't seem like it, so I'll just use my horizontal line. You can definitely see a clear indication of support at roughly the 80.75 or 80.80 mark. That would be your first port of call, the 20 period moving average, in fact. But we are still in a pullback. As long as price can find support at 80 and it fails to break lower, then we could be seeing a genuine reattempt of at least the 80.75 or 80.80 mark to start with. So make a note of that. Going into the new week, as long as price is trading above 80, then what we could do is see price pushing on from that. However, if you look at a 4-hour, for example, as I mentioned, we're still trading negative. We've still got lower swings, lower high, and we've just had a lower high. So there's a lot of work still to be done on this pair. It still needs to give us a lot more confirmation that we're going to see punches high. CTC is still extended to the downside, trading below all the moving averages. So 4-hour, there's still not a conviction in it. So got to get that conviction. On a 4-hour, we have to be trading outside of this consolidation band. Notice that at the 80.75 mark, we have that. So it's got to be trading above this previous high here that we saw. We do have, however, a blue arrow showing heads up. However, we've gone red on the candles again, so we've only got one indicator out of a possible 4 that are meant to be giving us the true buy or sell. And as it stands now, we're still inconclusive, especially on this time frame here. After breaking higher, notice that the swings, price is testing that area right now as we speak. So if you take the wicks, or you can see prices trading that. So the first thing it needs to do is stay above 80. If you can stay above 80, the longer it stays above 80, the more conviction there is that there's possibly a further upside movement. Failure to stay above 80 would confirm that all we're seeing is a pullback in this trend down, and what we could do is see a continuation to the downside. So 80 is very, very important at the moment. So looking at, let's have a look at our small time frames. You can see here, for example, there again there's 80 on an hourly. You see prices trading above it, but we need to see the conviction of this trade, and you can see that there's very much a big pullback to the downside. That has, if you look at it, broken now, that uptrend on an hourly, and we're now testing the underside. Failure to break higher than that trend line, would see this is just a pullback breakout, and then we could be retesting the 80 mark or lower in the next couple of hours or so. We need to see it hanging above 80 to give us confirmation that it's happy above 80. Otherwise, what we can do is see price toying with the 80 mark for the next couple of days, and we could see a continuation to the downside because of that. So needs to be finding support above 80 to be looking for longs. Ideally, it needs to be trading well above 80.40 in my eyes to be even considered long, because by doing so, then we'll be definitely trading higher than this bandwidth, this consolidation bandwidth we've seen over the past week or so. And if we can do that, then it just bodes well, because there's a lot more, it's less noisy to the upside. And remember, it's still giving us a heads up that we're still trading lower than that we're bearish long term, because the 200 period moving average is still way up here at the 80.50 mark. And I did mention we've got to be trading well above the 80.45 50 mark in order to be considered long on this pair, and we're still not. So on a smaller time frame, inch time frame, we're still considered in a consolidation period. You can see it's very consolidation. We need a definite break on either side of these two places here to give us a confirmation of further movement. That's it, guys. Hope you had a fantastic trading week. Hope you guys made lots of profits yesterday. In particular, we saw a lot of movement yesterday, a lot of news that came out. Not so good for the European and sterling market. Great for US dollar to a degree. Still a bit of indecision there, but we saw the US dollar gain a lot of strength because of that. It's Friday. We might see the markets just pretty much going sideways today. It's been a hectic week. You find people start scalping out of their positions, setting in, a lot of them tend to back out of their trades before a weekend. We might see that today, a lot of consolidation across the board. Just have a look and see if there's any news that might still factor in today. Let's have a look. What do we have? We have manufacturing for sterling. We have ECB President Tricker speaking right now as we speak at 10 to 8. And then at 9:30, we have two important figures out for the sterling or the UK market, manufacturing products month to month, expecting a change of 0.2%, which is obvious to the downside. And then we have the PPI input month to month figures. The previous figure was 2.6, expecting a forecast of negative 1.2. If it comes out worse than that, look for further downside movements. If it comes out slightly higher than that, then we could see that consolidation on cable take place. 9:30 again, we have consumer inflation expectations. What else do we have? Then noon GMT, we have Canadian figures, and we have the employment change and unemployment rate change. And then this afternoon for the US market, we have bits of bobs and stuff. We have import price month and month figures, which is, well, they're speculating lower, which would make sense. It comes up higher than the forecast, we could see US dollar rallying. If it comes out negative than the forecast, then we could see the US dollar stalling on that. And then later on this evening at 7 p.m. GMT, the US dollar has its federal budget balance. Previous figure was minus or negative 40.5 billion. The forecast for the US dollar federal balance figures are minus 148.2 billion. So you can see there's a massive difference. So you can see that the US dollar is the American market has been really affected. That's a huge, that's $108 billion difference in the past, since the past figure that was posted. So a huge difference. If it comes out less than that, if it comes out at 148 and lower, i.e. 150, etc., then we're really going to be in the doing. If it comes out higher than 148, say 145, 146, anything lower than the 148, then we could see the US dollar taking this bit of favorable, because then it's just giving you an indication that the market is slightly turning. Okay, that's it, guys. Have a fantastic weekend with family and friends, and most importantly, trade serenely.